Welcome back to the channel, Crypto Trend Trader, and today we're going to be taking a look at Binance, BNB coin. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so we're going to be doing some long-term technical analysis on BNB, and then we're going to take a look at the short-term time frames as well and see if they're giving us the same picture. So here we're looking at the life cycle of BNB going back to November 2017. We have Binance coin compared to Tether US on the monthly. So we can see we're clearly in an uptrend. We have a low. We put in a series of higher highs and higher lows. And now here we are at the top of the range, basically going sideways, putting in some form of consolidation. Now that being said, we see the 8 and 21 on the monthly have a bear cross for the first time in existence. So obviously that is a bearish signal. The next thing we would expect to happen after that in an attempt to retest that level and avert that bear cross, we would expect a retest of the bottom side of the range. So if we look here at this monthly chart, we can see a clear swing low down here. This was the one from March of 2020. So we're going to go ahead and take our Fibonacci tool and we're going to just draw from that point at the low all the way up to our point at the top. And then we're going to drag it out to the right so we can see what we're doing. And we'll just switch that over to blue. And there we are. So we have from the low here to the all-time high right here. And then we have basically a little double top right there. We came back up to it, but didn't quite get there the second time. And then we came back down to the low. So we basically topped out, retested the 236, which is the minimum retrace, came all the way back up, put in a lower high. And now here we retested the 236 a second time, broke down from it. And then we pushed up here again. And now it looks like we just put in another in a series of lower highs and lower lows. So we have a high, then a low, then a lower high, then a lower low. Now we have another lower high, and then potentially looking at another lower low. But the most important thing that we want to look at on this monthly time frame, and the biggest red flag you can pretty much ever have on a stock or crypto, any kind of asset at all, is when you have no price action above a certain level, and then you have a single candle that is essentially price action. So here we had above this level we had never been in June of 2019, came down to a low, and then we finally broke above that level. We closed one candle above it, and then this is a single monthly candle right here. So the problem is, and the danger is with this asset right now, when we have a single candle like that, there's basically what we call an air pocket this entire level down. So there's a gigantic air pocket in BNB. If we fall below that 208 level, there's basically no price action that took place with the exception of this 30-day period in Binance's history where people traded inside that. So if you didn't trade inside that, you either traded before that at a much lower level or you traded above that at a much higher level. So the problem with the air pocket is that there's not a built support. Like here when we have all these monthly candles going up and a slow push and we have rejections and then consolidations and higher lows and then pushes back up, there's all these months and all these different levels. But here there's absolutely nothing, just a gigantic air pocket. And we've already come down and retested the 236. So it makes sense that if we do break down from this level, if we do lose this level again, our next lowest low is likely to take us potentially as low as the 382. And again, the problem with this issue right now is that 382 is just in the middle of this range. So sure, maybe we come down to the 382 next. But the probability is, well, if we break down from this level, from up here, this support, that we could actually see a test of the 382, and then there's almost no support down to the 0.5, and then there's almost no support down to the 618. So we could see a very, very violent sell-off potentially take place on this asset. And obviously the indicator oscillator is pointing potentially in that direction as well. So now here we are on the weekly. We see we have retested the 200 exponential, didn't quite get to the 200 simple. We've gone sideways for quite some time. We have red histograms and slope line here. We've tried to push back up and get back on top of the slope line on the weekly, retesting the zero, trying to build some momentum and potentially save us from that big move to the downside. We have a hard sell signal and the Stochs are angled to the downside. We're below the 8 and the 21. We had a bear cross. We tried to get back above that cross right here. There was obviously some FUD going on. This was exactly when FTX was imploding and CZ was battling with Sam Bankman-Fried on Twitter. We see a push up here, a hard rejection. That was an attempt to finally break out of, basically a descending range. So we see from the top right here, we had come down and basically had clear resistance, clear resistance, clear resistance, finally broke above it, and then we tried to break out and it got rejected. Bearishly engulfed, come back down. So far it's okay because it's kind of hanging on to this level, but you have to be very careful if we break down from this level. Again, we have that big air pocket. There's a lot to worry about. So I'm just going to make that a little less imposing. I'm going to turn off our drawing tools, and then we're going to pay attention to what we're seeing right here. So I talk about double tops and those type of formations and just the psychology or mentality behind them. Here we have what appears to be essentially a blow off top, a strong, aggressive triangle type top, and then a massive sell-off back down to a key support, in this case the 236 Fibonacci. And we're just going to use our arrow tool to just kind of draw that out. You can do it however you want, but something along those lines is what we're looking at. And then we're going to take our curve tool and just slap that over here, and then we're just going to draw it down to that same point roughly, and then we're just going to kind of stretch this out. And essentially, depending on how you look at this, something like that, whether you want to drag it out over the whole range, the idea is still the same. And essentially, all we're looking at is a spike top and then a rounding top, double top with a clear support line. That is a textbook Adam and Eve double top. So we know there's a key support right here. We've come down and retested that support, 3 times here, 4, 5, and now we're basically at that level again, potentially for our 6th time. We still have some support from the 200 moving averages, and we're still above the 236 for now. But again, we know if that level breaks, this area right here, here we're on the weekly, we now have a 1 week period that took us to the 0.5, a second week that took us to the 382, and then the third took us to the 236. So it's not crazy to think we could see a monthly or weekly candles just basically dropping down massive percentages. So what I'm looking at here is basically a double top around this level on the weekly, on the shorter time frames, and the potential that if we break through this previous support right around 261, that's likely to take us back down to the bottom of the range, below the 236, and potentially threaten the cycle lows. So if we switch over to the daily now, we want to look for an internal retracement. All right, so we went ahead and drew a Fibonacci from the top of the range here down to the bottom of the range. And then we see the internal retracement initially pushes up here above the 236, up to the 382, tries to get to the 0.5, doesn't quite get there, comes back down to the 236, back up to the 618. We see some peaks here around the 0.5. So we're seeing a fairly technical moves taking place on this asset. We want to try one more thing though. What if we actually drag this up to the all-time high and see, does that change anything, make it look more or less technical? I would say it looks about the same, no big difference, but it's never a bad idea to do that to make sure that other people aren't looking from the previous top slightly higher. So that being said, we can see pretty clearly what's taking place here. We had to push all the way down. We came up initially, got above the 382, but not quite to the 0.5, came back down to around the 236, back up almost to the 618, and now here we are back at the 236. What we want to see is a push up from this level, a high, and then a higher low like we see, followed by a higher high, and then we want to see a higher low once again. Unfortunately, once we put in the high right here, we came down and took out that low. So technically we haven't started back into a downtrend, but it's starting to look more and more like a downtrend, followed by an impulse reflex rally back to the upside, and likely we will see another downtrend. So the truth is, with BNB coin, it looks like the majority, if not all the risk, is to the downside. There's a massive air pocket. There's 3 Fibonacci levels in the way. Any one of those could act as a temporary or permanent bottom. But the fact of the matter is, at any point in time, we could potentially see this asset dropping down initially like 31%. And then if we break to a new low, that's 56%. If we break down to the 0.5 Fibonacci, that's 74%. And if we break all the way down to the 618 Fibonacci, that is actually around 85% to the downside. So BNB coin could be in some serious danger. And all that is being said, the fact that BNB currently is already down 60%. So we're down 60% from the highs, and there's potential for us to go down another 30, 60, or even almost 90%. So there is quite a bit of risk of this, which normally that's fine. It's just another crypto. Anything can happen to any crypto. It wouldn't be a big deal. But the issue is that Binance itself is now the biggest crypto exchange. And we're seeing the exact same situation play out like we did with FTX, where essentially they have their own token. They supposedly have everything backed. We don't have any specific proof of it. They're located outside the United States. So there's quite a bit of actual risk to the market, at least the crypto market. Maybe not the complete global financial system, but at least to the crypto market, crypto exchanges, and potentially crypto as we know it, if we saw a similar type situation happen with FTX. Now, I'm not saying that that's going to happen. Obviously, we don't know anything about Binance or its finances or its backings, only what they've told us, which is unfortunate because, obviously without regulations, we don't know if that can even be trusted. That being said, I'm not saying Binance has to go to the downside, but we see we're clearly below the 200 exponential and simple. We have been fighting to regain those levels. If we fail to regain them again, it's just going to look like a breakdown to a new low, a push back up to a lower high, and then likely another push down to the lower low. The real question is, where is that low going to be? Is it going to be somewhere around, 181 for a double retest? Is it going to be 116? Is it going to be 65? Or are we going to end up back down here in the low 30s to, 40s? The potential that Binance could even get back down to $40 is enough to show you that there is quite a bit of risk to the downside. So you do have to be very, very careful in this asset. Again, we see we started to build some momentum to the upside on the TDMACD, and then we broke down, and we see the Stochs are still powerfully angled to the downside and inside the bearish control zone. So right now, I do not like the way Binance looks, and there's quite a bit of risk to the downside. We have talked about a short position on this previously, and I think that is definitely still a potential possibility, running a stop loss off of our current Fibonacci's with targets to the downside based on the macro fibs in blue. So that's it for BNB. Just want to take a quick look at that one and just present some of the inherent risk, not only to the actual crypto itself, but to the entire market and crypto space. So be very careful if you are involved in Binance. We see this type of Adam and Eve double top playing out very often. We'll see a couple last pushes up, an attempt to save that level. But when the actual break happens, it's oftentimes too quick to reposition or get out of existing positions. And while Binance is incentivizing people to hold BNB coin, it puts you at further risk, because if something does break down, people don't care about the incentive. All they care about is their capital. So that is it for BNB crypto, Binance coin, Tether US on the Binance exchange, and the potential threat risk to the downside. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Make sure to like and subscribe if you enjoyed today's video. If you have any requests or specific things you would like looked at, make sure to leave it down in the comments. That's it for today, Crypto Trend Trader, and I'm out of here.